Okay, well, hello everybody. This is Andy here from boldwaves.org, and this is the weekend video update. And we're going to go through the markets again and review the week. And what a week it's been. And we'll get into that in a short while. But suffice to say that a couple of weeks ago, I did a very bearish outlook for the future, and I think that there's a very a decent possibility that that bearish outlook has been confirmed this week. So, okay, get your hats because it's going to start raining. Okay, so we're going to go through the FX markets first. We'll start with Eurodollar. This is the Eurodollar 4-hour chart, and it looks like we have this large degree wave 2 complete at the recent high, and we're moving down now, possibly into a very large third wave down, which should, in theory, should bring us down below parity. The only caveat that we're working on right now is whether this B wave low should be transferred to the low this week. We shall see about that one. The only thing we can really do is just follow the happenings over the next couple of weeks to see if that happens. The alternate count being an expanded flat here within a B wave, and then you get a C wave higher into the 50% retracement level again. And at that point, even if this alternate count or the alternate count is confirmed, then we'll probably head down into a third wave anyway. So it's splitting hairs at this stage. Okay, so here is the hourly chart. You can see that's the possible expanded flat. It's still an expanded flat. In an expanded flat, you would still get, this would be the wave C, and you would still get 5 waves down within wave C. So hence the reason why it's quite hard to call at this stage. So you can see at the moment I'm working on this 5 waves down in wave 1, 3 waves, expanded flat wave 2. We hit the previous 4th wave high, 115.90 today, and we've broken down off that again. So for next week, I'm looking for a confirmation of the bearish pattern. We should get a split either way. Early next week, we should get confirmation of either the alternate count or the current wave count. Suffice to say that Eurodollar is expected to, in the long term, or in the medium term, towards the end of this year, probably push towards parity. Okay. So here is pound dollar. Get onto the 4-hour chart. Again, pound dollar is the same kind of setup. A very large degree 4th wave triangle that completed, or sorry, no, combination that completed up here at the 143 level way back in April, and off that level we were looking for 5 waves down and 3 waves up. So we've got a very large impulse wave off the wave 4 correction, and we are pretty much confirmed to be running down in wave 5 now. I am contemplating changing up the degree of the labeling here on cable next week, but that won't change the pattern. It'll just move the action up by 1 degree. Okay, so let's get into the hourly chart. So the 4-hour chart shows a possible 3-wave correction ongoing in cable. Again, much like Eurodollar, we're looking for to confirm or deny this. I think cable is more likely we'll see a run up to complete wave C next week, but we'll see about that. Here's wave C. You can see I'm tracking a possible 1, 2, 3, wave 3 up to today's or yesterday's high, expanded flat wave 4, and we should see a run up in wave 5 next week. We always have that alternate count there, and the alternate count will be confirmed. That's the more immediately bearish count, excuse me, and that'll be confirmed with a break of support there, 129.20 next week. If that happens, either way, a break of 129.20 will probably usher in a large degree third wave down. Okay, so the outlook for cable next week is just to see a turning point, a completion of a wave C and a turning point lower. Okay, dollar yen. I switched to the alternate account in dollar yen early this week, or Wednesday, I think. I am now viewing this ongoing kind of sideways pattern off the wave 1 high as an expanded flat wave 2. So we should see, even though the wave count, caught this rally up quite well, excuse me, and we caught the high, and we were looking for a decline. I think the decline looks more impulsive and suggests a move down in a C wave rather than in a correction. So hence the reason for the change in wave count. And there's also another alternate wave count shown there, which I think on the daily chart would be best viewed. The other alternate would be that this large B wave is still unfolding in a possible triangle. So you would, if that was the case, then you had the A wave high there at 125 way back in 2015, and since then you would have A, B, C, D, and E, and even in that alternate count, you have an expectation for another decline into about the 107 area. So either way, I think we get a decline into about 108 or 107 to complete either a wave 2 or wave E of B. And let's get back out again into the short-term chart. If this is a wave C down in wave 2, well then we've got wave 1 more or less complete. We should work on wave 2 next week, so we should get a correction up to about the 113 level again, and then a run down in a third wave. So I think this C wave should probably unfold pretty quickly over the next 10 days, 2 weeks or so, and we have support at 108, so that's what we'll look for. Initial support actually is at the 109 level, so that's where you'd look for the beginnings of a turnaround. So we'll see how that works out. Okay, so that's dollar yen. Let's move on to stock market. And last week we were looking for, in this video I was talking about an impulse wave off the high and a possible rush down into a third wave, and we got that this week. And the market just took out 3 months of upside kind of gains in the stock market, just wiped it out in a few days, and that is the amazing power of the switch between a positive and negative social mood, and how quickly it happens. Even though bullish, let's say the bullish percentage in the market was at its highest ever, up at these highs here, obviously, and the outlook was ever higher stock prices, and at that point you can pretty much guess that the market is at a high when people are so damn bullish. So the market usually punishes that sort of action. You can see here on the 4-hour chart we now have an imminent death cross in the averages here. We'll see how that continues. It looks like the pattern off the high is a pretty picture perfect impulse wave. So again, next week will be pretty crucial to see if we complete a kind of a 3-wave correction off the 5 waves lower. And let's get into the short-term chart to see how that's working out. Okay, so I'm counting a leading diagonal wave 1, zigzag wave 2, and then we had 1, 2, 3, 4, 5, wave 3, 4, and 5 down into wave 1. Now, there's also a possibility that we have a contracting triangle ongoing here, and again, that's the alternate count at the moment. So it's kind of 50-50 between wave 2 underway or wave 4 contracting triangle, and I think initial resistance at about 25,750 should hold. I wouldn't like to see it go much higher than that in wave 2, and at that point would look for a turn lower again into a pretty large degree third wave down. And the end of the end of this endless bull market. And I hope everybody has their affairs in order because your ATMs are going to be shutting down soon if this is the case. Okay, so for next week, all hyperbole aside, for next week, we want to concentrate on this corrective pattern. Do we get a triangle? Do we get a zigzag or a flat, or do we get a pushback up into this kind of no man's land here, this air pocket up around the 26 level again, 26,000 level? That will unfold early on next week, and we shall be there to kind of document it. I think by the end of next week, if let's say a triangle unfolds, by the end of next week we should be pretty certain on a complete impulse wave off the high, large degree impulse wave. So we'll track that on the nightly updates. Okay, let's get on to gold. And last week in the video we were looking for a move higher in gold. Here's the 4-hour chart. So we're tracking a wave 1 and wave 2, and let's see if I can get labels on these things here, which I should have done, but I didn't do. So this would be wave 2, and I reckon why that's the charm of this video update is the fact that I haven't the charts completed before actually pressing record. Okay, so we have wave 1 and wave 2 complete, and we could be moving up into a large degree third wave. And let's do that too. And we have resistance at 13, that's the previous wave B. We have resistance at 1236, and that's the previous fourth wave in here. And I think if we get a break at that 1236 level, we'll confirm wave 3. And let's get to the short-term chart to see what sort of targets we can set for wave 3. So we have that's wave 1 up and wave 2 down. I think that's a double combination, wave 2, and hence the reason it took so damn long to complete. We had a wave 1 up and wave 2 down into this week's low, and then the update this week we were looking for Tuesday we were looking for a burst higher in a third wave, and we got that on Wednesday. So I think that third wave is still ongoing. Possible triangle wave 4 within wave 3. Let's see, that should clear up by Monday, and I think a break of 1234 should be a decent target for wave 3 brown to complete. And then we should, by next week, we should be moving up. We should be complete wave 3 by the end of next week. Wave 4, we should be probably well on the way to completing wave 4 in brown there. Let's put that in there as well. Why not? Why break a winning formula in that? So this wave 4 again should probably hold around the 1234 level, but by the following week we should be into wave 3, completing wave 3 at one higher degree, and that is at the target for that is about 1267, and the reason for that is that 1267 is where wave 3 blue reaches the Fibonacci 161.8% extension of wave 1 blue, so hence the target at 1267. So for the next couple of weeks we're looking to the upside in an ongoing impulse move, and again we'll follow that in nightly updates. Okay, diddly dum. Let's move on to crude oil. Again, crude oil could be completing an ending diagonal wave 5. On the other hand, I am leaning heavily towards the bearish alternate count at this stage, which would view this complete correction at the high, at the recent high shown as wave 3 there. That would be at around, let's get a number on that, 76.70 or so. So we have an impulse pattern more or less complete in a large degree wave 4 or a large degree wave B, and we should be looking for confirmation of a change of trend to the downside again. So here is the short-term chart, the hourly chart. There's the alternate count showing a completed wave 5 up there. The possibility of a 1-2, either a 1-2-1-2 pattern or a 1-2-3-4-5 pattern lower ongoing. The action over the last couple of days has been pretty flat, so it's a possibility of maybe a small degree triangle within, let's say, the bearish alternate count, or we could be seeing a low complete in wave 4 of an ending diagonal. That's all to be confirmed. Let's say I'm sticking with the current wave count because it's a coin toss at the moment between both wave counts. Both are long-term bearish. The current wave count would allow for one more push up to 76.90 or so to complete. And at that point, then you'd be looking for an impulse wave off that high to give us a bearish signal there for a rundown into a very large degree wave 5. Early next week, I mean, this could all go south quite quickly, and we could get a confirmation of this alternate bearish count here. So that's what we watch for on Monday and Tuesday. Okay, let's get into S&P. The S&P again, looking at a completed 5 waves up at multiple degrees of trend, at least 6 degrees of trend here. And the declines this week, last week we were looking for the declines, and the declines came this week. And you can see here on the 4-hour chart, we have the debt cross in place on the moving averages. We're now into oversold territory, but we should see a correction of this week's lows in a correction higher into about the 27, 28 level again. And let's get into the short-term count to kind of confirm that. I think in the longer term, if we get a larger degree third wave down, which breaks the previous wave 4 here at about 26.90, if we get that support level breaks, then we're on for full-blown bear market. Okay, so let's get into the hourly chart. We have a completed wave 5. This is the impulse pattern we were working with last week in the video, and throughout the week. And then on Tuesday we thought that we had an impulse signal complete to the downside, and we were looking for a rush lower in a third wave, and we got that rush lower in a third wave acceleration, which took out previous support levels, wave 4, an internal wave 2, and then the large degree wave 4, which we were still resting below at the moment. And here again is that previous fourth wave at 26.90. So 26.90 going forward will be the next. We got quite close to that this week, but that will be, let's say, long-term trend change confirmation. Okay, so what happens from here? I'm tracking a possible 3-wave pattern. Again, it's more or less like the Dow. We could have a triangle unfolding, or we could have a 3-wave flat or zigzag unfolding in a second wave. So early next week, we want to differentiate between those two and see if we can complete a larger impulse pattern pointing us lower in the long term. So that's the outlook for S&P. Let's get into silver. Well, we've got the moves off the high. We had a nice little punch higher this week as well, which wasn't to the degree that we had in the previous week. But if you look at the moving averages, we've got a bullish cross there in place. We've got some bullish action in RSI and MACD, so we've got a nice, let's say, continuous lower highs there off that divergence. We've got a pretty complete wave pattern, and we've got a move to the upside, let's say. The short-term pattern itself, I'm a little bit iffy about, and I'll go into the reason why. It could be an expanding wedge, a bullish like wedge off the low. It also could be a wave 1-2 running flat and wave 1-2. It could be a series of 1-2s off the low. We seem to be working higher in the 5-wave pattern, but I would like to see those internal wave B here at 1476 and the higher, let's say, bullish confirmation point of $15. I'd like to see that go a break higher above $15 to kind of confirm that the turn is in, and that's what we'll be looking for next week. And we'll see if we can get a pretty opportune entry point here. Okay, so let's get on to the final market. This is Treasury market. 10-year Treasury. We had that 5 waves down in wave 1, which the wave count pretty much caught sublimely. I was quite happy about that. So we got 5 waves down. We completed wave 1. We're working on a correction higher in wave 2. Possibility that it's complete, but let's get into that right now. To see the caveat, there's always a caveat in life, isn't it horrible? So I'm showing a completed wave 2 with the expectation of a move lower next week in a third wave. The only caveat is that we could be working on, let's say, 5 waves up, a larger zigzag in 5, 3, 5, up to about the 119, the mid 119 levels. And that would bring us up to the 61.8% retracement. And the reason I'm kind of leaning a little bit that way would be the pattern of the low could be viewed as 1, 2, 3, 4, 5 third wave, wave 4, and now maybe a push higher in wave 5. So I think we could by early next week, by let's say Tuesday, let's call it Wednesday. By Wednesday next week, we'll be either confirmed on the alternate count or we'll be confirmed on the immediately bearish count, which views wave 2 as already complete. Suffice to say, we've got a nice 5 waves down, and we're working on 3 waves up to complete a long-term bearish pattern to the downside. And that completes this week's video update. It's been a hell of a week, and I think next week, if all goes to plan, I think next week could even prove to be worse for the bulls. So let's get our affairs in order, guys, and let's see, and gals, and let's see if we can capitalize on other people's stupidity. Okay, wishing you all the best for the weekend. Thanks so much for being members, bullwaves.org, and we'll see you again on Monday to chart another week. Godspeed, everyone. Bye-bye.